I would say mixed results coming out of retailers. So, for example, on Kohl's, they missed on the sales line. So the comp sales came in down about 5%, and analysts were expecting down 2.5%. But the good news was that they beat on the bottom line and they raised their earnings guidance for the year. So they're now expecting something closer to $2, whereas before they were expecting something less than $1.80 previously. So while that is good news, they do need to get the top line right-sided. And with Tom Kingsbury as the CEO, and has an amazing track record. He's the one who took Burlington from sort of a mall-based type discount retailer to an off-price, fast-growing company. So there's a lot of faith in him. He's bringing in a new categories. The Sephora business did well. It was up low teens on a comp basis, with total beauty sales up 45%. But now we need conversion. And yes, there's headwinds from the consumer. So then if you take it over to Abercrombie, on the other side of the picture, their customer base for both brands, Hollister and the Abercrombie and Fitch brands, their household income is 100 to 150,000. Not like Kohl's where you're under 75 in household income. And so you really have to be very discerning. So an Abercrombie is executing very, very well. And that explains why they had double-digit increases in comp sales. The Abercrombie brand was up 21% on a comp basis, and you had a 15% increase on Hollister. And that's on top of double-digit increases a year ago. And they're seeing strength early in the third quarter. They're constantly extending the categories because they know what their Gen Z for the Hollister and millennial on the Abercrombie side customers want. So that's a company that's executing very well with just great results. And then Nordstrom is sort of in that similar category. And we did see good numbers come out of them late yesterday. The sales were a little lighter than consensus estimated. Their comp sales for Rack were up 4%. Consensus was looking for 6%, and the full line store was up just under 1% on a comp basis, but they were looking for something more than 1%, like 1.3. But they had strong full price sales. That's very encouraging. And the fact that the business is actually generating positive sales, something that we're not seeing really in department stores, of course, when we had Macy's report with disappointing numbers. So again, that speaks to their higher income consumer also in that base. And of course, Rack total revenues were up almost 9%. It's the off-price story.
Yep.
You know, something that we saw out of the off-price last week with TJX and Ross.
Mary, if I listen to everything you're saying from sort of a macroeconomics lens, I wonder if there's like a big theme to be taken away here, excluding sort of the execution hits and misses from each company. But it sounds to me like, those lower income consumers are struggling a little bit. The higher income consumers are still spending. I mean, is that simple takeaway? Is that too simplified, or is that really kind of the story that is emerging from the earnings season for retailers?
Yeah, I think that's fair. And even, as we get up into the higher income, they're also trying to save money too. I think that you saw that in the news out last week with Walmart and Target. And so a lot of them are taking advantage of the better prices there, but that also keeps them in a good position to continue spending elsewhere, so for things that are more desirable. So yes, I think clearly the lower income, lower middle income consumer, and even middle income consumer is just having a hard time dealing with high food and energy prices. And that's showing up in their very discerning spending. That's exactly what you're seeing.
So, Mary, help me understand what's happening with Abercrombie stock today. It's down 16% on the news. So I guess the sales boost was good, but not good enough?
Yeah, it could be, but I also view it as potentially short-lived as well. So sometimes when you have reactions, for example, on Kohl's, even though they had the big sales miss, right? You see the stocks up very strong there, but I think part of it's probably due to short covering. And, there's probably some optimism that with they're getting the Babies R Us, those just started to flow in this month. So we're not really seeing the benefits of that. And they're seeing good momentum in the new categories that they brought. We're just not seeing it convert all the way to lifting sales. But as we start to cycle looking out a year from now, which of course we know that's really how equities and investors think, they're going to be going against these easy comparisons, and it may make it easier for them to show a sales lift, but we'll see.
Mary, I just sent my youngest two kids off to the school today. They back to school already. We started early in Metuchen, but it got me thinking about that really important back to school shopping season, especially for, your Abercrombies of the world. What's the outlook there? I mean, if you could break out your crystal ball and tell us what the next quarter numbers are going to look like. Do you think, is there going to be some weakness because of all these issues you're describing?
Yeah, so it's a good question. I think once again, we'll probably have some mixed results, but Abercrombie is seeing very good reaction to some of the initial categories that they have. So for example, in Hollister, they've got their collegiate line that they've launched, and it's more extended. It covers about 32 universities. If you look at on the Abercrombie side, they have the NFL line by Abercrombie, and they've had that. This is the third year running now, but each year they extend it further and further because the demand is so strong. And that's sort of part of their strategy. So we are seeing, I think, good results there. Now, as we start to get more media coverage of the election uncertainty, we have seen in past times around this election cycle where there is that uncertainty, it can sometimes have an impact on consumer spending. But generally, I think it's really going to come down to, those that are executing and those that are skewing to a more of a premium consumer or ones with greater discretionary income.